Once again, welcoming to you all to this educational channel Accounting Equations Academy. And today I am here with the subject income tax, and which I will discuss with you about the computation of income from salary. Taking few points which are of course very important from examinations point of view. These points are very common and regularly asked in examinations questions. Therefore, by taking important points or questions is prepared, and that I am going to explain. You or all of you must watch it till the end. Do not leave in the middle of the class, otherwise you will find difficult to understand. Okay, here is the questions on the screen. Problem is on screen. Mr. A is manager at Pune. Population is 20 lakh, and for the period between 1st April 2023 and 31st March 2020, that is the previous year 2023-24, has received the following salary and other payments from his company. Basic salary rupees 48,000 per month, the dearness allowance rupees 10,000. So it is not a part of salary, and it is nothing is mentioned about the dearness allowance. City compensatory allowance, it is fully taxable. Entertainment allowance, fully taxable one time. This is the per annum, and these are the per month. Per month value shall be multiplied by 12, and per annum is only one time. Similarly, commission on sales achieved by him rupees 24,000, it is also one time receiving. Rent-free accommodations of a building furnished on which employer pay municipal tax rupees 60,000 per annum, and furniture value is rupees 1,20,000. So value of furniture is provided, so it is a furnished house. Medical bill reimbursed by company. Treatment taken from a private hospital rupees 12,000. Provisions in a different condition, amount is taxable. So medical bill reimbursed for a specified disease, it is exempted. Medical treatment taken from a approved hospital exempted. So if it is taken from a private hospital and not a specified disease, it is be taxable. Okay, he is provided with a car of 1.8 LT liter, which is partly for personal. Sometimes you get 1800 cc also, cubic capacity, 1.8 LT or 1800 cc, partly for employment purposes. So other these informations are not relevant. Only 2400 rupees per month into 12 plus 900 per month into 12 for driver salary is taxable value. As per terms of agreement, this is professional tax paid by employer. During the year, he traveled in connection with the job and paid 1600 as traveling allowance and rupees 1200 as a daily allowance. He and his employer contributed rupees 90,000 per month per annum each to RPF, recognized provident fund. Both employer and employee contributed. So employee's contribution is eligible for deduction under section 80C. Employer contribution is not eligible for deduction under section 80C. In fact, it is taxable if the amount is exceeding 12% of salary. So I will show you the calculations of this in the solution part. So during the year he paid rupees 6,450. This amount is eligible for deduction under section 80C in old tax regime. So computation of compute the income under the head salary and qualifying amount for deductions under section 80C. So now I am taking to you all towards solutions to this question, and now the problem solution is on the screen. So all of you look it, all of you watch it, and till the end of the videos you all of you watch it, then you will understand. Title to the solution: computation of income from salary of Mr. A resident individual for the assessment year 2024-25 relating to previous year 2023-24. Salary rupees 48,000 per month for 12 months, 5,76,000. So annual computation, income tax is computed on annual income. So all income is calculated on annual basis. So dearness allowance given in the questions. So then the dearness allowance rupees 10,000 per month for 12 months. It is 1,20,000. City compensatory allowance 800 rupees per month. So 800 into 12, 9,600. Then entertainment allowance rupees 12,000. It is not per month, it's annually amount given. This amount is annually received once. Commission on sales received, it is also received once by Mr. A from his company. And rent free furnished accommodation, so it is calculated with the help of working note. So I am taking to you all towards working note. Okay, so see, working note is to be calculated on rent free furnished house, given it is under section 17 subsection 2 clause 1 and rule 3 sub rule 1. So first of all you have to calculate the salary amount. So it is given the all money given in the questions, and for the purpose of rent free accommodation, so all monetary benefit received which is to the extent of taxable value and which are received regularly from the employer by the employee, then that all monetary benefit received shall be taken into account for calculations of value of rent free accommodation. Question: salary means basic salary plus city compensatory allowance plus entertainment allowance plus commission on sales, that is turnover. Substituting the value of this, so salary for this purpose, total basic salary as given in the questions 5,76,000, and your city compensatory allowance 9,600, entertainment allowance 12,000, commission on sales 24,000. So when we aggregate, so the total value is 6,21,600. And the value of, since the population given in the question is 20 lakh, so and the computation rent free accommodation rule has been changed in the middle of the previous year 2023-24. So accordingly the amount of rent free accommodations is to be calculated in this manner, since population is 20 lakhs given in the question. So in old rule 10% of salary for first 5 months, so 6,21,500 multiplied by 5 divided by 12, so this is the whole year salary. Then 10%, so this 10% is taken 10 by 100, so it comes 25,900. Then next 7.5% of salary of 7 months, so the same manner 6,21,600 divided by 12 multiplied by 7, and the 7.5% of salary, so it comes 27,195. So totaling, after totaling, so this after totaling these two values, it is 53,095. Since the house is furnished and the 10% of cost of furniture shall be added to the value of unfurnished house. Here this is the value of rent free unfurnished house, and if the 10% of cost of furniture or higher charges paid by employer is added to get the value of rent free furnished accommodation, and it is 65,095. The furniture's value provided by the employer in the given question 1,20,000. So 10% of 1,20,000, it is 12,000. So after adding this value 12,000 with 53,095, so then the value of rent-free furnished accommodation is 65,095. So this value shall be taxable value of rent-free furnished accommodation. So this 65,095 value, how we calculated, how this value is obtained, just now you have seen the working notes on rent-free unfurnished accommodation. So in this way you have to calculate the value of rent-free furnished accommodation. Thereafter, the medical bill reimbursement fully taxable since the treatment is taken in private hospital, and value of motor car as it is 1.8 LT 2,400 per month is taxable. 2,400 per month into 12 plus a driver is also provided, so rupees 900 per month into 12. So together it is 39,600 is the taxable. Professional tax paid by employer, it is taxable. Traveling allowance and daily allowances are, these two allowances are given in connection with the job. Therefore, these two allowances are claim exempted. Next, employers' contributions to RPF, recognized provident fund, in excess of 12% of salary. So this is the rule. Employers' contribution up to 12% is nothing taxable, but beyond 12% amount is taxable. So how to find out this, how to calculate this 18,000 rupees, the value which is obtained taxable value. 18,000 rupees is a taxable portion of the employer's contributions to RPF. So here the working, it is the rule. So as per provision of the Income Tax Act, employer taxable amount of employer contributions to RPF is calculated as under. Salary for this purpose is a basic salary plus commission on sales. Dearness allowance is not a part of salary since it is silent, so it cannot be considered for calculating employers' contributions to RPF amount as well as the rent-free accommodation. 5 lakh, the basic salary is, annual basic salary is 5,76,000 plus annual commission on sales is 24,000, total 6 lakh rupees, and 12% of this 6 lakh is 72,000. Employers has contributed 90,000 rupees as given in the question. So this also 72,000 is up to, is the limit. Beyond this amount, any excess, any amount exceeding 72,000, that will be considered as deemed income, deemed to be received and chargeable to tax, and that is here it is calculated. 90,000 is the contribution being made by employers and his limit is 72,000. So difference is 18,000 and this value is taxable. 18,000 is taxable. Now aggregating all individuals' value to get gross income from salary, we have to aggregate all individual values. Basic salary here 5,76,000 plus 1,20,000 plus 96,000, 12,000, and a standard deduction under section 16 clause 1A rupees 50,000, and professional tax paid is rupees 2,000, and total 52,000 is deductible from 8,78,295. So balance obtained is 8,26,295, which is net income from salary. And another part is given in the question, computation for calculation of qualifying amount for deduction under section 80C. Section 80C, employees' contributions to RPF fully eligible for deduction. This is the 90,000, and life insurance premium paid of his major son 6,450. So these two amount is eligible for deduction under section 80C. That is total amount is 96,450. Well, viewers, so here the solutions to these questions: income from salary. So this salary chapter is very important, especially students appearing their become level examinations, including NEP batch students. So all of you watch it till the end, and do not forget to like, subscribe, and give your comment and share with your friends. Thank you very much. Jai Hind.